happy Thursday, everybody. This is Rob Reinhold. It is April 11th, and we got a bounce back today in the markets. In this session, we're going to be covering what happened today. Like I said, there was a rebound. Did that change anything technically? We are 100% technical traders at Maverick Trading. Our opinion doesn't matter. The technicals do. We'll take a look at those technicals to see if they changed. And as always, I've got some more trades for you. I've got 2 bulls and 1 sideways trade. Let's jump into it.
This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, by the end of the day, we had a little bit of a roller coaster today, but we opened up, we then fell apart, and then the buyers came in and we ended up much closer to our highs. The Dow was down 0.01%. Now look, if this is not proof that the Dow is an ancient relic, I know we keep talking about it. I can't wait until one day we're going to make a decision to just never talk about it again. Look, it's a price-weighted average. It's only 30 stocks, and the highest price stocks have the largest effect on the entire index. So when a stock like Boeing, that was a very high-priced stock, gets crushed, all the stocks at the bottom that are like $20 a share, they could go up a ton. And as long as Boeing goes down a lot, that average is going to look like this. So look, ignore it. One day we'll stop talking about it. Maybe today's the day, but I doubt it. Let's look at the others. The S&P, 0.75%. That was a nice gain here. The Qs, wait till you see the Q chart. We not only made up what we lost yesterday, but we added on top of that. Oil was down, but it's solidly above that $80 area that it just struggled for. And gold, holy cow. Gold has been absolutely on fire and continues to be on fire. I've liked that trade for about the last 3 weeks after that breakout. What was the news that propelled us today? Well, the PPI. Yesterday we got the CPI, much hotter than expected. The market tanked, but it didn't fall apart during the day. That was a big deal. It did not fall apart during the day. It didn't bounce, but it gapped down and stayed down. Today, we got the PPI, came in better than expected, and basically we erased a lot of that loss there. We did hear from some more Fed governors that basically said, we're not there yet as far as where we want inflation to be. The market is starting to price in that there's not going to be 3 rate cuts this year, and it looks like there's only going to be 2, at least that's what the market says. I said at the first of the year, I think there's 0 rate cuts this year, which means the economy is going to stay fairly strong. Let's take a look at the charts, and let's look at what the charts say. Now, I always love to say this, and you probably are sick of hearing me say it, but I always say, imagine you woke up from a coma. You've been in a coma for 10 years. You don't know who's president. You don't know anything. And the first thing I do, yeah, I'm there in your room when you wake up from a coma. That's weird. But first thing I do is show you this chart and say, okay, I need help. What should I do here? That's the best way to look at things objectively to where you're getting rid of all of your biases. As you can see here, we have had a decent pullback. And this pullback is the first one we've had for a while. And we've now just pulled back. And you can see that we have hit this point 3 times now. Hit this point 3 times. We don't have a confirmation yet. We really need to kind of break out of this channel. Once we break out of that channel, I think you can say, okay, we're now bouncing. That's on the S&P. Some of the negative things we could say about the S&P is this 20-day moving average is no longer rising. It's flattening. That's a negative on our score here. So we'll take a look at our score, but what I want to do is I want to come over here to the NASDAQ. And just show you that the NASDAQ has looked like garbage compared to everything else for a while. I mean, take a look at how long we've been in sideways trading. We've been in sideways trading since February. That seems like a long time ago. And we now came down and hit the 50-day moving average twice. But today's candle, wow. That not only took us above above Tuesday's high, we recovered all of our losses and more. And if we take a look at maybe some trend lines here, there's reason to believe that the NASDAQ may be breaking out to a higher level. Now, we've been underperforming the NASDAQ, but if this breaks out, if we get a green candle tomorrow, and possibly even a green candle to a new high, remember, this has been 2 months of consolidation. When you break out of a 2 months of consolidation, it typically breaks through with some power and some momentum. We'll have to wait and see what happens tomorrow, but everything in these charts are really saying, hey, you know what? The rally's still on. It's on pause on the NASDAQ, but it might be back on in just a day or two more. And if we get that confirmation of the S&P, then all of a sudden, the rally's back on. Here is the heat map. Look, I could definitely pull this out and say this rally wasn't real. Only about half of stocks went up today, half of stocks went down. That's not a real broad rally. And you can see, what went up the most? The largest tech stocks. Apple, Amazon, Nvidia, Microsoft. Okay, yes, I agree with you. This was a narrow rally. But remember, back in November, when the rally started, it was very narrow as well. These were the stocks that took off first and kind of dragged everything with it. I still think we need a day or two more confirmation, but if we get 2 or 3 more up days tomorrow, I think we've got to go back up to a +2 or +3. But where we are right here, right now, we're at a +1 because we do scoring here. Are we above the 20 moving average? The answer is no, we're at it. Are we above the 50? Clearly, yes. Is the slope of both the 20 and 50 going higher? Well, for the first time in months, the answer is no, they're not. So really, we've got to back this down to a +1. If you're making any new trades, you have to make them based on a +1. As I said, tomorrow, maybe Monday, we might go back up to a +2 or a +3, but right here, right now, it is at a 1. So I think you can be mildly bullish the market, but nothing more than that yet. Let's take a look at some trades. I ran out of places to put potential bullish trades. There are so many potential bullish trades out there. It's crazy. What I was really looking for were for stocks that have outperformed the market. Look, the market's been a little dicey here lately. We've been in a pullback. We've been in a base. The question is, what are the ones that have been shrugging everything off? And here is Applied Material. Applied Material, absolutely beautiful, beautiful ascending triangle pattern here. As you can see, this 214 is resistance, but take a look at yesterday's candle. Yesterday's candle it hardly moved. It hardly went down. That's what you love to see. And then on a day when things go up, it cranks. This one to me looks like it's ready to break. I think all the way up to 220 is an easy call for a target. So I'm looking at like a 215, 220 bull call spread. Or you can do diagonals. You can do a lot of things on this one. But this one to me, I really like the stocks that held up much better than the market. That's telling me this is where the relative strength is. Here's another one. Here is TCOM. This is Trip.com. This is a Chinese travel company. And you can see, look at Thursday's candle. Sorry, Wednesday. I keep getting it mixed up. Look at yesterday's candle. That is a very, very mild candle on a nasty day we had. And then the stock opens up today. Boom, it takes off. This is looking really good here. Nice high and tight base breakout. I like this one. 52.50 for a target. So I'm looking at vertical spreads. I'm looking at diagonal spreads. A ton of things you can do here on TCOM. I literally just ran out of time and blocks and spaces to show you bullish setups. They are very, very easy to find at the moment. What is not as easy to find is the sideways stuff. And ironically, I actually found really good bearish stuff, but I'm just going to be showing you 2 bulls and a sideways today. So let's take a look at the sideways. And the sideways is in the tech sector. This is Fortinet, FTNT. And what we really want to do when we are looking for sideways stuff, we want to make sure we're not getting stuff that's basing. Things that are basing, we just took a look at 2 stocks that were basing and ready to break higher. The question is, okay, how are these different? How are these different? Well, first off, you can see that we are well off the highs. of this range. So 73 is the top, and you can see we're down closer to the bottom of the range here. The other things, moving averages have crossed. I want to go back to just this last chart, and I want to see you what healthy moving averages look like when they're telling you, hey, these things are going to break out. This is telling you this is consolidation, not sideways. We take a look at this FTNT, and we're saying, okay, this is more stagnation. So the range is 60, let's call it 67 to 73. I like the 70 target. So I think just looking for a 70 butterfly, 2 weeks out probably for those monthlies of April, that's where you're going to want to be. As I said, I did find some good bears, but I think the market is right there, ready to go back to being bullish. If it fails tomorrow, I will pull some of those out and take a look at them more seriously. But for right here, right now, I'm really just looking at potential bullish stuff. A green candle tomorrow means the pullback is likely over. We've been in this pullback. It's been choppy. We've had a couple nasty days. But all in all, when you take a step back, it's been very orderly. It's been a very small pullback. It hasn't even been like 5%. It's been like 2.5%, 3%. If we get a green candle tomorrow, especially on that NASDAQ going back up to all-time highs, it's going to pull everything back up with it, and it most likely means that the pullback is over. We do have second quarter earnings starting. I guess it's first quarter earnings announced in the second quarter. All the banks come out on Friday. This will really make or break this market. If these banks come out and they say positive things and it puts some fire into the market, we're going to get a big fat green candle tomorrow and all the charts are going to be screaming buy. Let's say that these companies come out and it's not so great and the reception is not so great from the market. Okay, we could be in some more consolidation, maybe some more pullback for a little bit more. Those are the two scenarios you can see. One is slightly muted, slightly down. The other is wildly bullish. Obviously, more risk reward to the upside. Tomorrow's candle is going to be important. I will be updating everything tomorrow on the trading room, and we'll see what happens there. Goodbye, everybody.